Welcome to Talk Tickers. We're your go-to for cutting through the noise and getting straight to the insights from the latest earnings calls. Today, we're diving deep into ServiceTitan's Q2 Fiscal 26 results. This call definitely made some waves, and we're here to help you understand why.
Exactly. We'll unpack their financials, look at the big strategic plays, and sort of connect the dots on what it means for vertical SaaS, especially, for the trades.
And wow, what a quarter it was. ServiceTitan really delivered, blowing past expectations on both the top and bottom lines. It wasn't just hitting numbers. They showed some serious efficiency gains that, well, clearly got the market's attention.
Oh, absolutely. Let's jump into those headline numbers. So non-GAAP diluted EPS came in at $0.33. Now, for anyone less familiar, that non-GAAP number usually backs out things like stock comp, one-off items, just to give a cleaner view of core operations.
Right.
And they crushed the consensus of $0.18. I mean, that's a 15-cent beat. Huge.
15 cents is massive.
Yeah. And revenue, also impressive. $242.1 million against estimates of about $229.5 million. So they beat by over $12.5 million. That's a solid 25% year-over-year growth.
Those are definitely attention-grabbing numbers. And beyond the headlines, the other metrics really painted a picture of strong operational health. Non-GAAP operating income hit $29.2 million. That translates to a record 12.1% operating margin.
Which is up 510 basis points year over year. That's a huge jump in profitability. Yeah, 5.1 percentage points more profit per dollar of revenue. And then free cash flow, an impressive $34.3 million. That surged 83% year over year. Shows they're generating real cash.
And don't forget GTV, gross transaction volume, that grew 19% year over year to nearly $23 billion. Shows healthy platform activity. And critically for SaaS, net dollar retention stayed strong, over 110%.
Which, just quickly for our listeners, that NDR metric tells you how much existing customers are expanding their spend, right? Not just sticking around.
Precisely. Over 110% is very healthy, shows the platform's value and stickiness.
Now, worth noting, while those non-GAAP figures were great, they did report a GAAP EPS loss of $-0.35.
Right.
How should we think about that GAAP loss when the operational story seems so strong?
That's a really important point. So GAAP, generally accepted accounting principles, it includes everything like stock-based comp, amortization, things the non-GAAP view adjusts for. While the loss is there on a GAAP basis, the market seems laser-focused on that non-GAAP strength, especially the operating leverage. It suggests scale is leading to much better efficiency.
Okay, a powerful signal for the long term, even if GAAP profitability isn't quite there yet for these high-growth tech names.
Exactly.
Okay, so the numbers are strong, undeniably. But what's the story here? What strategic moves really drove this? Management called Q2 the seasonally strongest quarter for the trades. Was this just riding a seasonal wave, or did they outperform that underlying strength?
Well, seasonality definitely helps. Summer's busy for HVAC, for example. But that 25% growth, plus those efficiency gains we talked about, that suggests they're doing more than just riding the tide. They're really executing. And what's fascinating is their core growth formula. It's like this flywheel.
Right, the classic sauce flywheel. But for ServiceTitan, in this specific, trade space, what makes their flywheel different? Maybe more powerful or even more challenging?
You nailed it. For them, it's all about delivering tangible ROI. They help their customers, the plumbers, electricians, HVAC guys, they help them grow by being more efficient. When those businesses grow, they put more techs on the ServiceTitan platform, more money flows through as GTV.
Which drives ServiceTitan subscription and usage revenue up.
Exactly. And then ServiceTitan reinvests that revenue into building more high ROI tools for those customers. It just feeds itself. Better customers, bigger ServiceTitan, better tools, better customers. It's very sticky.
And speaking of strategic wins fueling that cycle, the Roto-Rooter partnership announcement this quarter. Wow. I mean, Roto-Rooter, that's an iconic name. Biggest plumbing and drain cleaning provider in North America. Feels like huge validation.
It absolutely is.
But is there a risk there? Serving such a massive enterprise, could it divert resources? Maybe slow them down with complex integration needs?
It's a fair question. Big integrations can be complex, but management was pretty clear. Roto-Rooter chose them because they have both deep trade-specific workflows and robust enterprise capabilities. Roto-Rooter does residential and commercial. They needed a platform that gets both.
Okay.
So for ServiceTitan, this is massive proof point for their move-up market. It validates years of investment in serving those larger commercial clients. It's a statement.
And the rollout timing.
Expected early calendar year 2026 for the full U.S. company-owned branches and call centers. So yeah, the market will be watching that execution closely.
Okay, shifting from partnerships to tech, They're really pushing AI and automation with Titan Intelligence.
Uh,
And they shared this incredible story about a customer, Gulfshore Air Conditioning and Heating, achieving the first fully automated job. That sounds futuristic.
it does, right. And the details are pretty wild. Gulfshore, 30 employees, Florida Panhandle, been around 30 years. They use the ServiceTitan platform and its AI. Their virtual agent, they nicknamed it Finn. Finn basically booked, scheduled, dispatched, and handled the completion of a service job for like a 10-year-old piece of equipment.
So the only human involved was?
The tech actually doing the work on site. Finn handled everything else from optimizing the ad that got the lead all the way through to payment. It's end-to-end automation.
Okay, that's impressive. But what about the results? Did it actually move the needle for Gulfshore? And how easy is it for other businesses to get there?
Oh, the results were immediate and pretty dramatic. Gulfshore saw a 22% jump in close rates using their Sales Pro and Price Pro tools. Average ticket size went up $150 with Dispatch Pro. And get this, $370,000 in new revenue just from automated Marketing Pro campaigns.
Wow.
Plus, Finn booked 5 after-hours jobs literally within the first 24 hours of going live. So it clearly shows these pro products are key to unlocking that automation and ROI.
And the hurdle for others?
Probably the usual suspects: change management, getting teams comfortable with new workflows. It takes commitment to really embrace the whole platform, not just bits and pieces.
So ServiceTitan sees this automation as the future. What does that mean for the whole industry? Tiny shops to huge enterprises.
It's about democratizing this stuff, making sophisticated, integrated automation accessible beyond just the massive players who could afford custom builds before. ServiceTitan's bringing that enterprise-grade AI to, a 30-person shop like Gulfshore. That's a huge potential advantage for their customers. And for ServiceTitan, obviously.
Okay, let's dive back into the financials a bit deeper. Revenue growth drivers, you mentioned strong expansion within existing customers. That NDR metric working.
Right, land and expand in action.
And faster than expected new customer growth, too. Subscription revenue up 27%. Usage revenue also beat, up 23%. What was driving that usage piece again?
Mostly higher than expected GTV, so more transaction volume, but also a better mix of people using their on-platform payment solutions.
So getting a piece of the actual transaction value.
Exactly, which tends to be higher margin. And speaking of margins, platform gross margin crossed 80% for the first time, up 280 basis points year over year.
80% gross margin is strong for software. You mentioned some of that was a reclassification.
Yeah, about 200 basis points was reclassifying some customer success costs. But importantly, management also called out real leverage on infrastructure costs, plus better sales and marketing efficiency.
So real underlying improvement, too.
Definitely. And the overall operating margin expansion put them way ahead of their incremental margin targets. It's clear evidence of operating leverage kicking in as they scale. They're keeping more of each new revenue dollar.
Got it. Now, there was some talk about specific segments. Residential HVAC growth slowed a bit. Management blamed tough comps from last year's super hot summer. That the whole story?
It seems like the main factor. Last summer was an outlier, making the year-over-year compare really hard. But importantly, they said non-HVAC residential trades actually saw job volume pick up.
Okay, so maybe not a broad consumer slowdown signal. That
Doesn't look like it. More like specific HVAC comps, while other home services held up or improved, shows some diversification benefits in their customer base.
makes sense. And what about the push into commercial and construction? They've been investing there for about 3 years. Are we seeing real results now?
Management says yes, the efforts are beginning to yield results. Key seems to be building out those specific project management features construction requires. So things like managing crews, daily logs, RFIs, submittals, change orders, financials, document handling, and a better mobile experience for the job site.
Sounds complex.
It is. And longer term, they're looking at things like bid management. It's a phased approach to tackling that huge construction market.
And finally, on how they reach customers, their go-to-market. They were clear. They are not a product-led growth company. Quick reminder, what's PLG? And why not for ServiceTitan?
Right. So PLG is where users typically find and adopt the product themselves, often via free trials, minimal sales touch, think Slack, maybe Zoom initially. ServiceTitan operates in a complex B2B space. Their solution is high value, requires setup, training, so they use a more balanced traditional approach.
Like
Paid marketing, email, digital channels like YouTube, even TV and radio. Plus events, outbound sales, and a big partner ecosystem. It's a multi-channel, sales-assisted approach needed for complex deals like Roto-Rooter.
Okay, so wrapping up the analysis part. Strong quarter, Validates the land and expand plus fintech strategy, but those GAAP losses are still there. What's the key investor takeaway reconciling those?
It's really about seeing through the GAAP loss to the underlying operational improvement, that significant operating margin expansion alongside strong growth. That's the story. It shows the path to profitability is becoming clearer, even with continued heavy investment.
And the Roto-Rooter deal. More than just revenue, it's a lighthouse win, right? Validating their enterprise strategy. How quickly does a win like that impact market perception or sales cycles?
Good question. The announcement itself can have an immediate psychological boost. It validates them for other large prospects. Then, as they hit execution milestones into 2025 and early 2026 for the actual go live and hopefully land more big logos because of this win, market confidence should really build. It shortens the conversation with the next big prospect.
Makes sense. Looking ahead, they gave Q3 guidance. Revenue $237 to $239 million. Non-GAAP operating income $14 to $15 million. And full year, revenue $935 to $940 million. Op income $74 to $76 million. Seems okay, but maybe a bit conservative after such a strong Q2. Or just reflecting normal seasonality.
Probably mostly seasonality. Q3 is typically slower after the summer peak for trades. Management acknowledged that dip, but they also talked up a sturdier full-year margin arc and recommitted to their long-term 25% incremental margin goal. So managing expectations short-term while signaling long-term confidence in profitability seems prudent.
So key things for you listening to watch going forward. Catalysts and maybe risks.
Definitely watch the Roto-Rooter execution updates. Any news on landing more big enterprise logos, continued growth in payments and usage revenue as GTV climbs, and obviously, future guidance. Risks. A major slowdown in the trades economy? Sure. Any stumbles integrating Roto-Rooter or other large clients? Maybe slower than hoped adoption of the AI and Pro products, but the momentum feels pretty solid right now.
All right. Time for our This Is Not Financial Advice segment. Strictly for entertainment, folks. We float an outrageous but plausible trade idea based on the call. What have you got?
Okay, so based on this really strong Q2, that massive Roto-Rooter validation, and seeing real ROI from AI automation like with Gulfshore, the trade idea starts to form itself.
Let's hear it. Our idea. Go long ServiceTitan, ticker TTN. The conviction here is that the market still isn't fully appreciating just how fast the operating leverage is improving and the ripple effect from landing Roto-Rooter.
Yeah, we think that visibility from a huge name like Roto-Rooter, plus the proof that Titan Intelligence actually works and makes money for customers, that combo could speed up adoption among other big commercial and enterprise players. Faster land and expand, especially with those high-margin products attached, that could drive margins and revenue even faster than analysts expect right now.
So you're looking for potentially faster profitability, maybe a re-rating of the stock multiple over, say, the next 12, 18 months as the market catches up to ServiceTitan becoming truly indispensable for the trades.
That's the idea. Again, just an idea, not advice. Do your own homework.
Absolutely. And that wraps our deep dive on ServiceTitan's Q2 FY26 earnings. Quite a quarter, big beats, big strategy moves.
Yeah, from the financials and margin gains to that Roto-Rooter deal and the AI potential, they seem to be firing on quite a few cylinders, really executing that vision.
Just a reminder, as always, this was informational only, definitely not financial advice. Please do your own research before making any investment decisions.
Yep, dig into it yourself. Think about those trends. Maybe ponder what else, Finn, the virtual agent, could do down the road.
Thanks for tuning in to Talk Tickers. We hope this breakdown helped you grasp the key takeaways and what really mattered this quarter. Let us know your thoughts, and we'll catch you on the next one.